I think this is really a sobering print, right? I mean, the stock was up quite significantly, not just TSMC, but the entire semiconductor sector. The stocks were up around the time when NVIDIA had the massive beat in May, and there has been a lot of chasing going on. Folks are trying to position and buy into semiconductor stocks and hoping AI-related demand could potentially pull all the semiconductor companies out of the current downturn. But I think this is a sobering print. One of the reasons is TSMC made it very clearly, like you just mentioned, smartphone, PCs, they still drive the largest volume for the semiconductor companies like TSMC. And the AI so far still a tiny amount. TSMC said it's right now 6% of the total revenue, although it's going to grow 50% CAGR over the next 5 years. But don't forget, smartphone, PC, that's really levered to the macro economy, the consumer sentiment. Those looks like they are still not in a good shape. So I guess there will likely be some reset in terms of the expectations for the rest of the semiconductor industry and the stocks as we go into the next earnings season.
Charles, as we are dealing with a global growth that is very weak, high inflation as well, could this potentially be a bottom, though, that we see for TSMC in this cycle as we head into the end of the year or the second half of the year, which is usually a strong season?
Yeah, well, I actually hold the view that this is actually the bottom for TSMC and probably for the entire industry. Well, if we're not at the bottom, we're very close to it. And the debate right now, why the stock got sold off in the U.S. Last night, really is because the path to recovery looks a little bit weaker than people were expecting. I mean, semiconductor is a cyclical industry. One thing to note is that the downturn typically lasts about 4 or 5 quarters, give or take. But that doesn't tell you that how fast, how strong the recovery is going to be. And compounded with the fact that the global economy still seems to be strong, still seems to be weak. And China specifically got caught out on TSMC earnings call in terms of the consumer weakness there related to smartphone, possibly PCs as well. That could dampen how the path to the recovery going into 2024. So I guess that I think the reaction to the stock is a little bit of a disappointment. But I would say this probably is the time for you to really get in and buy the stocks because once the data points start to show positive, the stock usually move really fast. And so we would say this is probably the time to buy the weakness.